Are you new to investing and perhaps looking for ways to get started? Or maybe a seasoned investor that has been investing in the stock market for years? Regardless of the category that you belong to, in this video, I'm going to be sharing with you six different holdings that would be perfect for any investors to invest in the stock market passively. And they would be perfect options for those looking for maximizing their wealth in the year 2023. Without any further ado, let's get into it. Good day, everyone. My name is Mo, and in this video on our channel, Momentum Finance, we talk all about investing in the stock market, real estate, and crypto investing. And in this video, we're going to put our money where our mouth is. And in fact, we'll be sharing with you the six different funds that we have ourselves been investing in to passive investing through exchange traded funds, index funds. And these are the ones that have really played out well for us. In fact, not only for us, but for many investors that have been investing in the stock market for many, many years. The beauty of investing in the index funds passively is a few things. First and foremost is that you don't really need to do a ton of research when it comes to investing rather than picking stocks. Here, you're investing in index funds, which is a basket of multi-hundreds and sometimes thousands of different stocks in it. To this strategy, you're actually banking on the average returns that you can get to the index funds. The name average may have some sort of a negative connotation, but in fact, it's not a bad thing at all because in many cases, when investors try to really pick a winning stocks, in most cases, they are actually unsuccessful and end up really losing a lot more. And so this is the one way of really overcoming that and banking on the great returns that you can expect through investing in index funds overall and the overall stock market. On top of that, add to that the fact that the costs associated with buying and selling or buying index funds are very minimal. Most of these index funds that we are investing in have very minimal fees, and they can be as low as anywhere, let's say, close to 0.03%, which is just a fraction of a point. And sometimes the highest amount is as low as 0. Maybe 25 or so. Still quite a fraction of a point and really making it easy for us. And for us, these six funds that we're going to be talking about are the ones that we ourselves have investment in all of them. Why don't we get started and take a look at them closely? First things first, for those of you who've been following our journey so far, you notice that on our Wealthsimple Trade app, we've already been upgraded to the Plus, Wealthsimple Plus. And that's one of the features that we have because we've already invested more than $100,000 to Wealthsimple. Our portfolio here consists of three major accounts, or the one being personal accounts, or non-registered account, which has the highest amount of investments here, currently sitting at $192,269. Then we have some balance in our registered retirement savings plan and tax-free savings account. These are the type of accounts that you get as a Canadian investor. Given that I live in Canada and hence my investments are all here. That being said, though, my investments are not just in Canadian stocks. In fact, these ETFs gives me exposure to not only Canadian, but also US as well as international markets. And we're going to be walking you through them. Let's take a closer look at our personal accounts. That's something that we have most of our funds in. If you look at the performance in the past week, this fund is up by 1% or $2,000, and the last trading day it was up by as well close to that 1%, a fraction of a point that rounded up to that 1%. The largest holding in our portfolio is actually the one that we have with Vanguard FTSE Canadian High Dividend Yield Index ETF, or the ticker symbol VDY. In our non-registered account, we have 2,064 shares, but we have more shares because we have some in our tax-free account as well as some shares in our registered retirement savings plan. So as an example, you see we have another $25,000 worth of it in our tax-free savings account and another close to $3,000 in our registered retirement savings plan. That's actually our largest holding across these different accounts. The other holding that you see here belongs to our shares of VFV, or Vanguard S&P 500 Index ETF. As the name suggests, by investing to VFV, we are actually getting exposure to the 500 largest US companies. We have close to 555 shares of it in our non-registered account and another 171 in our tax-free savings account, as well as another 117 shares of it in our registered retirement savings plan, all of which are currently performing positively and are in positive return territory. That's the second pick that we recommend for investors. With VDY, you're getting exposure to high dividend paying businesses, Canadian businesses, close to that top 50 Canadian companies with high dividends, and you get paid those dividends on a monthly basis. Whereas with VFE, the focus is not much on dividends and rather more so on the growth that you get from the S&P 500 companies, the largest companies in the US. The third pick that I would have, especially for investors in Canada, is to XIC, or BlackRock iShares Core S&P Toronto Stock Exchange Caps Composite Index ETF. By investing to XIC, you're literally getting exposure to the entire Canadian stock market. It's not necessarily one of the largest holdings we have, but one that we are gradually building and adding more funds to it. We have these accounts in our RSP and personal accounts, and currently showing a positive return on both of these accounts as well. Now, if you go back to our accounts, the other holding that I want to bring to attention of you is our two accounts that gives us exposure to more of a international exposures. The first one being the V or Vanguard FTSE Emerging Markets All Cap Index ETF. Through this fund, as the name suggests, you're getting exposure to thousands of companies that are available in the emerging markets at a low fee, and it's doing actually quite well. We have 605 shares of this account. Only at our non-registered account, the value being closer to that $21,000, and it's up by 7% already. This is despite the fact that it's actually been in our account for only a matter of perhaps months, and it's not holding that for such a long time either. The other account that I would bring to your attention is XEF. Again, some sort of like international exposure, but here you're getting more exposure to companies in East and Far East, geographical distributions. It's called BlackRock Canada iShares Core MSCI East and Far East Index ETF. It's up by close to 8% for us. We have close to $21,000 worth of investments here in our non-registered accounts. As you told this with XEF, the dividend rate is at 2.75%. The dividends here are paid on a biannual basis. With VDO, the one that we talked about earlier, that one pays its dividends on a quarterly basis. And lastly, just before I miss, for VFE, although the focus is a lot on the growth, it does still pay a quarterly dividend, and though at a lower rate, but it does pay it, as I mentioned, on a quarterly basis. The yield for that one is closer to 1.3%. These were the top 5 holdings that I was talking to you about that I have in my non-registered account. There's one other holding that makes the 6th holding for us, and that's one I would recommend, particularly for investors who are looking for maybe an easy way to get exposure geographically without having to pick and choose multiple ETFs. So let's say if you had one ETF that has all the combination of exposure to Canada, US, international, emerging market into one, and by picking that one, you could have easily got all of that diversified exposure. That would be perhaps a wonderful solution, and that's the one that we have to our Smith Maneuver portfolio. For us, we've picked the one from Vanguard, and it's actually Vanguard Investments VEQT. It's Vanguard's Investments Canada All Equity ETF with ticker symbol VEQT.TO. There are alternatives of this fund as well. For example, BlackRock has its own version of it with ticker symbol X Equity, XEQT. There are as well some available with other firms that you could look into. With VEQT, here 100% of your exposures is actually to stocks. If you look at the performance of VEQT over the past time frame, in the past 1 year, it's showing to be down by 1.44%. Past 6 months, it's showing to be up by 6%. Past 3 months, it's showing to be up by another close to 7%. Past 1 month, it's up by 2.3%. Past week, it was up. In fact, no, it was down by a fraction of a point, down 0.15%. In the last trading day, I believe it was almost flat in the last trading day, maybe up by slightly. For us, we currently have a total of 2,708 shares of VEQT at an average price of $35.76. We still have some funds in terms of the cash value that we can invest. With VEQT, it does pay its dividend on an annual basis, only once, currently averaging about that 2%. The last time that we got paid a very juicy dividend of close to that $1,500 that we used it as a dividend reinvestment plan or DRIP, and we bought more shares of VEQT all in all. We currently have around $2,000 as cash value in our account that we want to continue to buy more shares of VEQT in the week ahead, as well as possibly in the next 2 weeks. This VEQT is part of our Quest Trade portfolio, which is our Smith Maneuver one. And here, as we pay down our mortgage, that we have access to our equity, and that equity becomes available, and we could reborrow that funds to reinvest for the plans that we have in the stock market. If I quickly show you the portfolio that we have, this actually includes a few investments that as well my wife has in the same type of funds with VFE and VDY, but she has them to her own TFSA account and registered retirement savings plan. All in all, they bring our total investments to a much larger position. As an example, if you look at our total number of VDY shares, we have close to 4,000 shares of VDY, or a total value of $174,000, which accounts for 43% of our portfolio. It's showing to be up by 4.4%. The second largest holding in total for our accounts is VFE, up by 2.4%, and the third large one is indeed VEQT. It's actually down by 6% at this time. Now, following that, we have closely following XEF and V. Both of them are showing to be up by 8% and 7.9%. And lastly, XIC, which is up by 1.2%. We did have some shares of Bank of Nova Scotia, currently down by 2.6%, but that's not necessarily the one that I'm recommending. As I mentioned, the focus for us is really investing passively. And we want to really take advantage of that and build a larger portfolio size through this approach. Currently, this portfolio is showing to be up by 1.7%, or a total of $6,892 in net profit unrealized. The total value of this portfolio is just shy of $412,000, which is just incredible, knowing that we have deposited only about $405,000. And this year, 2023, we are anticipating this to be growing to a much larger position. Lastly, before I wrap up the video, I want to quickly show you how much dividend income we expect from this portfolio. Is a total of $11,209 annually, averaging equally to about $934 monthly and averaging $31 in dividend income per day on average. So there you have it, folks, a quick look into our portfolio and the 6 top holdings in stocks that I do encourage for investors to consider for their portfolio if they are really looking into building a high quality portfolio at low cost, passively, allowing you to accumulate and generate wealth for many years to come. These are the ones that we are already envisioning and kind of pursuing actively. And I personally would like to put my money where my mouth is, and those are the ones that I encourage and recommend. But of course, do your own research. There's so many stocks and funds out there in the market. You're always encouraged to actually do your own research before buying any shares of companies or stocks or ETFs for that matter. If you have any questions, let us know in the comment section down below. I read through each and every comment, and we will be sure to respond to your inquiries as they come in. If you enjoyed this video and found it beneficial and inspiring, please don't forget to give it a thumbs up and subscribe to our channel. Here on Momentum Finance, we post every week videos about investing in the stock market, real estate, and crypto. We also talk about ways to reach financial freedom and financial independence. Thank you, and I hope to see you all next time.